Yo, what's good on my trader and investor homies? It's your boy Kevin. This is Touchdown Trades. I'm your trading BFF, your stock market bestie. In today's video, we're going to be discussing my top 3 stocks from the ARKK ETF. Ark Invest is known for investing in intuitive and disruptive technology, and we also love to invest in intuitive and disruptive technology here at Touchdown Trades. So why wouldn't I just go buy the ARKK ETF instead of picking and choosing my favorite stocks? Well, me as a full-time trader, as a full-time investor, I can't just go buy an ETF because there's going to be some stocks in there that I don't like, and it's going to drag down the ETF, and you're going to get a 7 or 8% return on your investment every year, and that's fine. If you're somebody who works a full-time job or doesn't have enough time to do research and due diligence and find the favorite stocks that you want to invest in, then getting 8% on your money is great. Having your money work for you while you're at work making more money is great, but for me, I want to pick and choose my stocks. And Cathie Wood is a genius. Ark Invest is probably the best ETF manager out there. So what I do is I use her as a cheat sheet. I go through her funds and I pick and choose what she's buying. I do my own research, my own due diligence, and if they match up, then great, and then I have an investment and I wait for that dip to happen and I buy in. So I use her kind of as a cheat sheet. You know, like the kid in the back of the class who's really smart, but he's just kind of lazy. He's a genius. He's going to end up being a lawyer, a doctor or something, but he just doesn't want to put the work in, so he gets a cheat sheet and he during the test, he's looking at the cheat sheet. That's me. I know how to invest, I know how to pick stocks, but why not use somebody like Cathie Wood to cheat off of? So in today's video, that's what we're doing. We're going to take a look at the ARKK Fund, and I'm going to show you guys my top 3 favorite stocks from that fund and talk about why they are my favorite stocks from that fund. So let's get it, and as always, let's secure the bag by making sound investments and smart trades. Let's do it. I'm not personally a big fan of buying ETFs. I know if you're not as an active an investor as I am, or an active trader like I am, this is what I do for a living, this is what I do full time, so I want to pick my own stocks, I want to pick my own trades, I want to pick my own investments. But if you're somebody who has a full-time job and can't put 8 hours a day of research and due diligence into the stock market, an ETF is a great way to get exposure to the stock market, get your 10% a year, and let your money work for you. There's absolutely nothing wrong with it. Actually, I promote it. But me personally, I like to pick my own stocks, but I do think Cathie Wood and Ark Invest is one of the best funds out there. Cathie Wood is a genius in the industry, so I like to use her as a cheat sheet. I like to see what she's buying, and I like to see what she's holding, and then I go through the list of the holdings, and then I pick out some of the companies that I see value in, that I am personally interested in. I do my research, and then I kind of use it as a cheat sheet and invest in those companies. So in today's video, we're going to talk about my top 5 stocks that I personally like from the ARKK Fund. The ARKK is the innovation ETF. They look for disruptive and innovative tech to invest in. So let's jump right into it. But before we get started, after the video, yes, after you watch the video and get 5 bad A stocks that are about to blast off and have huge growth potential, check out the link in the description for Webull. Me and Webull have partnered up. They are offering you 3 free stocks when you sign up using my link and deposit $100. In my opinion, Webull's the best broker, and you can't beat this deal. Deposit $100 and you get 3 free stocks valued up to $1,600. So you're basically getting a huge return on your investment without even making a single investment. So I've done my research, I've done my due diligence, and I've got the ARKK holdings pulled up here on this sheet. And I'm going to start off with my favorite stock in the ARKK Fund, and wouldn't you know, it's their biggest holding, and that is going to be Tesla. So why is Tesla my favorite holding from the ARKK Fund? It isn't their common consumer vehicle production. It isn't the gigafactories. It isn't the new Tesla that's going to be sold for $25,000. All that stuff is awesome. I love Tesla as a company selling to your average common consumer, selling their average cars. But that's not why I'm a huge believer in the growth outlook of Tesla. Because if Tesla was just a car company, there's no if, ands, or buts about it. it would be too expensive. But it's not just a car company. And let's talk about why that's a fact. Because robo-taxis. Tesla is going to be the leader in robo-taxis, and the growth outlook for robo-taxis is absolutely crazy. Tesla is going to be the leader in autonomous driving, and that's going to incorporate into them being able to dominate the robo-taxi space. So the robo-taxi projected growth in 2022 or in 2020, there's projected to be 2,000 units sold in 2020. By the year 2030, there's projected to be almost 4 million units sold. So the growth is crazy. Imagine by 2040 how many robo-taxis are going to be sold around the world, and I expect Tesla to be the leader and have a foothold in this sector. There was a great report released by Allied Market Research going into the market share of robo-taxis. So they say the global robo-taxi market is expected to be only 1 billion in 2023. And is expected to reach 38 billion by 2030. So let's say by 2050, we're talking about a $100 billion industry. And in my opinion, there's no doubt about it. Tesla is going to be the leader of this industry that is going to be north of $100 billion. Solar, how about solar? Solar is also an industry that is growing exponentially. Solar's growth rate is straight up to the moon, baby. And I expect Tesla to be the leader in the residential solar game because they got it down. They got the marketing process down and they got the ordering process down. It's just the same as ordering a Tesla car. You go on, you put in your location, they spit out a price, and you order it all online. It's very streamlined, and I expect Tesla to be the leader in the residential solar game for years to come, and the growth outlook for solar is just straight up. So Tesla is far from being just a car company, and people and investors need to realize that when you invest in Tesla, you're basically investing in an ETF, not just a stock, an ETF. You got the EV game, you got the Class 8 trucking game, you got solar, you have robo-taxis, you have autonomous technology. You have so much different aspects incorporating Tesla as one company. It's basically an ETF. I got the Tesla chart, the weekly chart pulled up here, and let's talk about a 24-month price target here on Tesla. So we are getting the opportunity to buy this sucker at a dip because of the overall market correction. We had just hit highs of over $500. We are now at $389, coming into some nice support. We can see on the weekly chart, we have a nice support area at the $350 level. So I'm putting a 24-month price target of $1,000 per share on Tesla stock because I think investors, institutions are going to realize the potential of not only Tesla as a car company, but just so much other stuff incorporates Tesla, and they're just a behemoth. They are going to take off in the years to come. Stock number 2 from the ARKK holding is going to be ticker symbol TDOC, TelaDoc Health Inc. That is my second favorite stock for long-term investment from the ARKK Fund. TelaDoc is the leader in telemedicine. So basically what you do, you call a doctor up, you tell them your symptoms, your problems, and they can treat you over the phone. So going to the doctor is still going to be a thing that needs to be done. If you're seriously sick, you're seriously injured, you're still going to have to go to the doctor. But let's say, for example, your toddler has a cold. No more do you need to go to your pediatrician, wait for an hour in the waiting room, and then go see a doctor. Not only is it cheaper for your insurance company, so the insurance companies are going to be promoting it, it's also more convenient for the consumer, and I expect companies like TelaDoc to take over, and TelaDoc is the leader in the industry. I think this company has massive potential and is only going to grow into the future. There's no reason for a sick kid to have to go to the doctor. There's no reason if you have a sore throat to have to go to the doctor. TelaDoc is absolutely going to explode, and the growth outlook is amazing. Not only is the revenue growth going to increase as more and more insurance companies promote this to their clients because it saves the insurance companies money, but also I think they're going to be able to increase their margins. This is a company that could have the best margins imaginable because the overhead costs are so low. You don't have any retail spaces. It's all automated. You just have to pay the doctors. They can make the calls from their practice or their house, and it's just so convenient and so streamlined that I think this company has only one way to go, and that's up. So right now we have made a nice run over the last year from like the $70 area all the way up to $250, but we are getting a slight pullback back down towards the $200 area, and I see this as a buying opportunity. Any pullback in this TDOC stock I think is a buying opportunity. I'm putting a 24-month price target of $300 per share on this TelaDoc. The third and final stock, my third favorite stock from the ARKK holdings, is Zillow, baby. Zillow Group, ticker symbol Z. We all know Zillow as the MLS listing service that if you want to buy a house, sell a house, rent a house, you go on, you type your location, and it spits out the houses, and you look for the house, the location that you want to buy. And they make money from listing to real estate agents. They make money for people wanting to list on Zillow, but that is not why I'm so high on Zillow. Zillow offers is the future of Zillow. That is where you sell your home to Zillow. You want to sell your house. You don't want to go through the hassle of getting a real estate agent, of putting your house on the market, having open houses, showings, and then waiting months and months for closing. Zillow comes in. So you have the client wanting to sell their house. Zillow comes in, gives them an offer, and the close happens within weeks. Zillow then puts some repairs into the house and sells it for market value. So how do they make money? They're buying the house at a discounted price. So this is a market that is expected to grow exponentially in the years to come. We've seen companies like Opendoor with the same business model take off, but I see Zillow as the leader in this sector. And not only is Zillow the MLS site a profitable company and going to grow as the years to come, but this Zillow buying and selling houses themselves is going to grow and increase Zillow's profit margin exponentially and substantially. So I really see Zillow as a good buy right now. Zillow has made a nice run up over the last few months from the $20 area all the way over to $100, but we're getting a nice pullback. And if we pull back anymore, I'm going to be investing in Zillow down at the $75 area. So right now, I'm not a buyer on Zillow as it is a little bit extended in my opinion. But if we do get that pullback down towards 75, I am a buyer. So I'm going to be watching this thing, stalking it like a hawk, waiting for that 75 buy zone to hit. And I love the long-term outlook for Zillow. I got a 12-month or a 24-month price target of at least 150 on Zillow. I love the potential, and I think this thing's going to the moon, baby. All right, that's going to wrap things up. I hope you guys enjoyed the video. ARKK is a great fund. If you don't have the time or energy to spend a bunch of hours researching your stocks that you want to invest in, ARKK is a great place to put your money and expect decent returns every year. But I'm just not a believer in investing in a basket of stocks because some of the stocks I don't like. For example, let's go through the list here of the ARKK funds. I'm not a big fan of Roku. I think Roku is going to be in trouble in the years to come because I think the TV manufacturers themselves are going to be implementing the smart streaming stuff into their own TVs, and there's not going to be really a need for Roku in years to come. How about DocuSign? This ARKK fund owns DocuSign. I'm not a big fan of DocuSign. So there are some stocks in here that I'm not a fan of. Most of them I do like, but I'd rather go through, find the one I like, do my research, and invest in them on my own rather than just buying the whole basket. And that's why I do pick and choose my stocks. All right, guys. I'll catch y'all in the next one. If you're not yet a subscriber, consider subscribing, hitting that notification bell so you get alerted every time I post a video. If you haven't yet liked the button, please like the button. And if you're looking for a new broker, check out the link in the description for Webull. And when you sign up using my link, you'll get 3 free stocks valued up to $1,600. I'll catch you guys in the next one. Until next time, peace out, brother.